Microsoft has been on an incredible run over the past 10 to 15 years as the company has leaned into its lead in enterprise software and now moved into artificial intelligence, becoming one of the leaders there. But where's the company going to be 5 years from now? I think this is a stock that is probably going to underperform the market and may actually be flat 5 years from now. I'm going to get to exactly why. And let's start by explaining the company's business model. This is primarily an enterprise software company. Office 365 really dominates the company's productivity and business processes revenue, which has grown at an impressive 12.8% compound annual growth rate since the middle of 2023, when they started reporting the current three segments that they report. Office moved to a subscription model that continues to not only increase in price, but also increase the number of subscribers. And LinkedIn is actually a growing piece of this business as well. What's getting a little more attention in the market today is the cloud business, the intelligent cloud, as Microsoft calls it. That includes the Azure business, and that includes the OpenAI partnership that's been key to Microsoft's growth in artificial intelligence. On top of Azure, Intelligent Cloud includes enterprise services. This is software and consulting services that is sold to enterprises, but that business hasn't been a real growth driver over the last few years as the focus for Microsoft has moved to Azure, and particularly growth in growing its AI cloud services. There are also a lot of legacy products. Most of these fall into personal computing. This is products like Windows, the operating system, Xbox, and all of their gaming revenue, and then search and advertising, which still exists, particularly with Bing, which is obviously a huge laggard in the search business. But when you add all of these businesses together, Microsoft is a steady growth company. And the real highlight, what investors have gotten very excited about over the past few years, is their growth in cloud and artificial intelligence, like I said, through that partnership with OpenAI. So let's look at their performance and some of their overall financials. You can see here all of these segments stacked together. Productivity and business processes growing in double digits. Intelligent cloud is the highlight, growing at 20% compound annual growth rate. And more personal computing has a solid growth rate at 10.6%. Another tailwind has been the company's operating performance. You can see here that gross margin hasn't changed all that much over the past decade, but operating margin is just on a march higher, now 45.2%. That is phenomenal margin expansion that has happened under the leadership of Satya Nadella. But Microsoft has also benefited from multiple expansion. You can see that in this chart here. The price to sales multiple over the past decade has gone from 3.8 to 12.6. Part of that is driven by investors valuing their multiple expansion. That's the reason you don't see a huge growth in the PE multiple, which was actually in the low double digits in the early 2010s. But overall, over the last 10 to 15 years, investors are putting much more value on the revenue and net income than Microsoft is generating than they were at the end of the Steve Ballmer era. So that has really helped the company's stock performance. And that could impact the company's performance in the future as well, depending on whether those multiples are going to expand or contract in the future. So let's get to the bull case behind investing in Microsoft today. This is the go-to software for enterprises. There's really no other company with the productivity tools and operating systems that Microsoft has today. Like it or not, companies need to have products like Microsoft 365, whether they're using Word or Excel. These are must-have tools for businesses both internally and also interacting with external customers. Microsoft Azure has also become an absolute beast, growing in excess of 30%. And that growth is driven by artificial intelligence and their partnership with OpenAI. Microsoft is the cloud that is driving OpenAI's services today, and that growth looks to continue based on Microsoft's ownership of OpenAI. And that growth looks to continue because of the investments that Microsoft has made in OpenAI over the past few years. But like any company, there is a bear case as well. There's no doubt Microsoft has increased their prices and squeezed customers in a lot of ways, moving from selling software to the subscription model that we know today with Microsoft 365. And that means for existing customers, you're kind of locked into the Microsoft ecosystem. But smaller companies or newer companies who are looking to save on their budgets may look at something like Google Docs as a real viable solution. The reliance on OpenAI also can't be overlooked. Microsoft doesn't have its own models. They don't really have They don't really have AI products that are a hit with customers. So most of their growth in artificial intelligence is driven by OpenAI. But OpenAI wants to break free of that partnership with Microsoft because they have bigger growth ambitions. So they want to build bigger and better data centers. They want to move into hardware. All of those things are going to be threats to Microsoft's potential growth in AI, especially as competitors like Alphabet, Amazon, and Oracle build out their infrastructure to compete with Microsoft, who was once the clear leader in AI. I don't know that that's necessarily the case today. So you add all this together, and what's my prediction? I think in 5 years, Microsoft stock isn't going to go anywhere. I think in 5 years, Microsoft stock is actually going to underperform the market, and it's possible that it's essentially flat. And the reason for that is some of the tailwinds that have happened under the Satya Nadella era could become headwinds over the next few years. Multiple expansion could simply turn into multiple compression. Microsoft could continue to grow like they did from 2000 to 2015, and their stock could go nowhere. Products like Windows and Office are also shrinking in importance in both the corporate environment and in the personal computing environment. That's going to mean fewer customers and less pricing power over those products. There's also lots of uncertainty around the future of OpenAI and their partnership with Microsoft. OpenAI is trying to become a for-profit company. They're trying to build other partnerships. Microsoft absolutely has a lot of value in their stake in OpenAI today, but there's very clear tensions between the two companies as well. So that AI tailwind over the last 3 years could become an AI headwind in the future. And I think growth expectations, particularly from Microsoft Azure, are sky high just as competition gets more and more fierce. And a lot of that competition has very compelling products like Alphabet's own models, which are built on their own chips and their own servers. If developers and customers are going to choose those competitors, that's going to be a headwind to Microsoft. So put all this together and Microsoft could continue growing, but if the PE multiple goes from 35 to 20, that means the stock could go absolutely nowhere. That's why I think the price is just too high to pay today. The risk-reward balance is not great with Microsoft. But at the Motley Fool, your comments make us all smarter. So leave your thoughts about Microsoft and where you think the company's going to be in 5 years in the comments section below. Tell us what stocks you want us to cover next. And of course, check out fool.com/invest to get the top 10 stocks to buy right now. Thanks for watching, everybody. See you here next time.